Hello and welcome to the January 14th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Analog Devices, ticker symbol ADI. This is an $8.8 billion technology company that engages in design, manufacture, and marketing of analog, mixed signal, and digital signal processing integrated circuits used in industrial, communication, computer, and consumer applications. Now, if you take a look at ADI over the course of last year, obviously you're going to see a pretty nice uptrend. A couple things to point out. First, you can see this major gap up here with very, very heavy volume back in May. Notice once we gapped up there, we really never lost this low as we moved forward. So we consolidated and we broke out again. There was one other big gap up on this chart, and you can see that at the end of November. After we had had a steady uptrend for a period of months, especially over the summer in 2009, notice we were kind of in this flag pattern. And actually, I didn't mark it here, but if you look closely, it's actually an inverse head and shoulders. Off of this high in early September, we came down, we put in the left shoulder here, came back up in the second week of October, put in the left side of the neckline, came back down to a lower low, putting in the inverse head, came back up one more time here to put in the right side of the neckline, almost perfectly symmetrical, and then we came down the right side here and put in a much shallower right shoulder, right back to the 20-day and the 50-day moving average before making this breakout. Now, a couple things are significant. Number one, we did make the breakout, taking out this resistance area, the neckline, but more importantly, we did it with very, very heavy volume. So anytime we get that price volume confirmation and we do make a breakout of a pattern like this, it normally sets up for a move to fulfill that pattern measurement. Now, we went from about 25.20 or so up to about 28.80. So what's that, about $3.60? You add that to 28.80, you come up with 32.40. Notice that the high when this negative divergence went in was just above $32. So it made its measurement off of this inverse head and shoulders, and now it's coming back down. Now, the candlestick on Wednesday, you'll see here, was a hammer. We came down, we tested the 50-day moving average. This is significant because anytime we see a negative divergence develop, and in this case we've got the higher prices in late December over the early December highs, so clearly higher prices, and obviously also just as clear a much lower MACD reading. So that is a negative divergence, and off of that what we would expect is a 50-day test, and that's what we've gotten here. We've come back down over the last week or two. We've put in this 50-day test. The hammer on increasing volume could mark the bottom, and I say could because I do think that from a final line in the sand standpoint, I think you've got to use this neckline, which is a little bit below 29. Let's call it 28.75, 28.80, in that range. So I think that would be where I would consider my final line in the sand. But I think the current price down to the 50-day moving average would be a nice entry area. And then consider up around the $32 area as your initial resistance. That could be where you take some profits if you like to trade more frequently, or you could simply ride it out and see if we get the break above $32 and continue this previous uptrend. But ADI, I think, looks strong. It's really whether or not the overall market still has a little bit left in it here in the near term. If so, I would expect ADI to participate. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.